Hello, my name is Paul Jones, the Fund Manager of the Boston Income Fund, and welcome to another of our online video presentations. The Boston Income Fund is reporting a return of 2.9001% for the September 2015 quarter, equivalent to an annualised return of 11.5056%. Following the most recent Reserve Bank of Australia board meeting in the first week of October, the decision was again made to hold the official cash rate at 2%, marking the sixth straight month that the cash rate has been held at this level. In the minutes released following its last board meeting, the RBA discussed China and US markets and flagged concerns of the rate of growth in the non-mining sector. During the quarter, the Australian economy recorded weak GDP growth for the year ended June 2015, which comes off strong GDP result for the year to March 2015. Regardless, the RBA board still maintains a somewhat positive view of the Australian economy, noting that the degree of expansion was moderate, but within acceptable parameters, as it was accompanied by reasonable growth in the level of employment and a stable rate of unemployment. With respect to the direction of official cash rate, the market remains mixed. Futures markets and a number of institutional economists are pricing in the possibility of a near-term rate cut by the conclusion of this year, with some indicating the possibility that the official cash rate may be as low as 1.5% by the middle of 2016. Others are not so supportive, with the head economists from both Westpac and CBA both suggesting that the RBA is in no hurry to act on the official cash rate. Boston Income Fund will closely monitor the cash rate for the possibility of future movements, as this will have a direct impact on the return to our investors. During the preceding quarter, an announcement from the Australian Prudential Regulatory Authority, otherwise known as APRA, caused a measured amount of disruption in the mortgage space. APRA has motivated bank lenders to sharply restrict their lending activity to the investor market, which has had an impact on investment lending in residential housing sector. And we are watching the market to determine if this will have a flow-on effect to lending on commercial properties. APRA has been quietly ticking off a list of increased regulation and capital requirements in recent years, and these latest changes, which restrict investment lending of deposit-taking institutions, has caused non-bank funding to again come into its own. Within a relatively short period, these changes have had a profound effect on how mortgage brokers do business by reducing the dominance of major banks on their lender panels and pushing business towards the non-bank financial institution sector. This has had a flow-on effect to Boston Income Fund's primary investment vehicle, Thinktank Group Proprietary Limited. Being a significant player in the commercial property sector, Thinktank has seized on this opportunity and, in conjunction with an expansion of the existing sales team, have directly benefited as a result. In the September 2015 quarter, Thinktank experienced a sharp increase in loan originations. Across the quarter, there were a total of 54 new commercial property loans settled for a total volume of just under $50 million, which is up from $32.6 million in September 2014 quarter. And early indications are for this to remain consistent throughout the December 2015 quarter as well. As at the end of September 2015 quarter, the total value of loans under management was $343 million across 551 loan accounts. In comparative terms, the value of the loan book has grown since September 2014 quarter, where the total volume of loans sat at $274 million, by $69 million, an annual overall growth of 25.2%. The weighted average loan-to-value ratio across the book remains stable at 65.34%, and the proportion of loans with arrears above 90 days as a percentage of the loan book sits well below 1%. These metrics are definitely in line with our expectations, and the current growth in loan originations is very encouraging, which provides Boston Income Fund with a great deal of comfort in the relationship with Thinktank going forward. As always, if you have any questions about this statement, or if you wish to discuss your investment in the Boston Income Fund, please feel free to contact me on 02 89 20 886.